Most people ignore $100 because it feels small, but invested consistently, it can quietly become one of the most powerful financial decisions you ever make. We tend to underestimate small numbers. $100 feels like dinner out, a streaming subscription, a small upgrade. It doesn't feel like wealth. And because it doesn't feel powerful, we don't treat it seriously. But money does not grow based on how impressive it feels. It grows based on time and consistency. $100 invested once is insignificant. $100 invested every month for 10 years is discipline, and discipline compounds. Today, I want to show you exactly what $100 per month becomes over 10 years. Not theory, not motivation, just simple math and what it actually does to your life. Because this isn't really about $100. It's about proving to yourself that consistency beats intensity. And once you see the numbers, you'll understand why small investing habits quietly separate calm people from stressed ones. Most people delay investing because they think, I need more income, more savings, a bigger starting point. So they wait. And waiting feels safe, but waiting quietly costs time, and time is the real multiplier. Imagine two people. One waits until they can invest $500 a month. The other starts with $100 today. Over 10 years, the person who started earlier often ends up ahead, not because of income, but because of time in the market. This is where financial anxiety begins. We think small doesn't matter, so we postpone action. And postponing action creates regret. Small investing works because it removes pressure. It's manageable, it's sustainable, and sustainability is what builds wealth. You don't need dramatic moves, you need repetition. Let's remove emotion and look at math. $100 per month for 10 years equals $12,000 invested. That's your total contribution. Now, let's assume a conservative 7% annual return, roughly aligned with long-term stock market performance. After 10 years, that $100 per month becomes approximately $17,300. You invested $12,000. The market added over $5,000. That's not magic. That's compounding. The early dollars begin earning returns. Those returns begin earning returns. And slowly, the growth accelerates. The first few years look unimpressive. Around year 5, it starts to move. By year 10, it feels real. This is why most people quit too early. They stop before the curve bends upward. Here's something important. In the beginning, most of your balance is your own money. Around year 8 to 10, growth starts contributing more meaningfully. This is the psychological shift. You stop feeling like you're pushing a rock uphill. It begins rolling on its own. Compounding is slow at first because it's building a base. Just like strength training, the first month is invisible. The 12th month shows results. Investing works the same way. Small deposits create foundation. Foundation creates acceleration. The real mistake isn't starting small. The real mistake is stopping before compounding becomes visible. This is why consistency is more important than intensity. And this is where identity starts to change. You stop being someone who tries to invest and become someone who invests, automatically, calmly, without drama. Now let's zoom out for a second. After 10 years, you have roughly $17,300 from investing $100 per month at 7%. That's solid. But the real power isn't the number, it's what the number represents. You built a habit for 120 consecutive months. That means you trained discipline. You reduced impulsive spending. You prioritized future stability over short-term dopamine. And here's what's powerful. If you continue that same $100 for another 10 years without increasing it, the growth accelerates dramatically. Because now the base is larger. Now returns are compounding on a bigger foundation. We often look at 10 years as a long time, but financially, 10 years is the beginning of momentum.
It's the stage where investing stops feeling theoretical and starts feeling tangible. This is when anxiety decreases. This is when you realize you're not behind, you're building. Here's the twist most people miss. $100 per month does not just grow your portfolio, it grows your identity. When you invest automatically each month, you stop negotiating with yourself. You stop wondering if now is the right time. You remove emotion from the process. This creates psychological stability. You no longer feel like someone hoping for financial progress. You become someone executing a system, and systems reduce stress. The calm investors are not always the highest earners. They are the most consistent. They understand that wealth is rarely built through dramatic moves. It's built through boring repetition. When you look at your account after several years and see growth, even moderate growth, your relationship with money changes. You stop reacting to headlines. You stop fearing every market dip because you trust the process. Let's make this practical. Step 1. Open a low-cost brokerage account if you don't already have one. Step 2. Choose a broad market index fund. Something simple, diversified, low expense ratio. Step 3. Automate $100 per month. Set it and remove decision-making. Step 4. Ignore short-term noise. Focus on time, not headlines. This is not complicated. The complexity people chase often becomes the reason they delay. Small, automated, consistent. If $100 feels heavy, start with $50. The habit matters more than the number. Increase contributions when income rises, but protect the system first. Remember, wealth grows quietly. Dramatic investing stories are rare. Quiet compounding is common, but invisible. Many people try to accelerate wealth with intensity. They trade aggressively. They chase trends. They try to double money quickly. But intensity creates stress. Consistency creates calm. $100 per month won't make you rich overnight, but it will build stability. And stability gives you options. Financial freedom doesn't start at $1 million. It starts the moment you feel in control of your system. After 10 years of discipline, you're no longer starting from zero. You have capital, you have experience, you have patience. And those three together are powerful. Most people underestimate what steady effort does over a decade. But the decade will pass anyway. The only question is whether you invested during it. Let's pause and make this personal. If you invested $100 per month starting today, where would you be in 10 years? More importantly, who would you be? Because the real return isn't just financial, it's psychological. It's the quiet confidence that comes from knowing you've been consistent. This is how financial anxiety slowly disappears, not through big wins, through small systems repeated for years. If this helped you see small investing differently, the next step is understanding how early investing changes long-term outcomes dramatically. If this helped, the next video you should watch is how $10,000 invested at 25 becomes $300,000 by 65. And before you leave, I'm curious, how long have you been consistently investing each month?